those developments. So triple pay for you to stay and help out at work because things are so busy at work. Aaron Gibbs, Mitch Rochelle join us. They don't need triple pay. They just show up for no pay at their jobs because they love them so much. And meanwhile, guys, I found out other anchors here are paid, but I don't care because I love what I do so much. So it's so good to have both of you. Aaron, it's interesting, all kidding aside, what dilemma airlines are in. So desperate to have pilots and to keep up with the strong demand that they're willing to pay triple for their pilots to carry that burden, and they're having a devil of a time. What do you make of that?
Yeah, it's the similar story that we've been hearing all year round is really this is sort of our localized supply chain issue, but since we're a service-based economy, it's all about people providing those services, those workers. And so we can continue to expect to see inflationary pressures while we hear about this type of pent-up demand as people go out and go on vacation more. And so we're probably going to hear these kind of stories for several months to come.
What do you make of it, Mitch? Because we're learning that, you know, a lot of tech companies are taking back job offers to college graduates. Twitter rescinding a lot of job offers, period. So the pendulum, just as we thought it was swinging back, these are reminders, not entirely. What do you think?
Listen, Neil, you know, you and I have talked about this before. If you remember what it was like the last time we had inflation, it was met with high degrees of unemployment. The difference is we don't have as much of a union workforce in the United States with cost of living or COLA adjustments, which is what drove a lot of those layoffs and ultimately higher unemployment. But I think companies are pumping the brakes a little bit. The growth that they've experienced over the last several years was probably unsustainable. And they're thinking about the growth, they're thinking about future quarters worth of earnings, and they're saying, listen, let's not get ahead of our skis in terms of hiring workers. The only problem is the labor market is so incredibly disruptive that if they don't hire them, it's possible somebody else will. So it's really a difficult thing to reconcile this difference between the number of job openings in this country, the number of unemployed, and the fact that some companies are starting to say we're going to slow down our hiring.
You know, it's weird, guys, too, because they say everything comes in pairs or threes here, but it comes at the same time California is going to hand out, I guess, inflation checks to residents in the state of up to $1,000 to deal with this. And the administration is kicking around the idea of dropping the federal gas tax. That's an uphill battle in and of itself. But do these type of measures work? Aaron, what do you think?
Well, certainly adding more money to the system is actually bad and works in the wrong way. So while it may make people feel happy very briefly, we know that stimulus ultimately makes things much harder. And the only way to really slow down is to bring the demand down and therefore prices down. Certainly reducing taxes on gas would probably be one of the more direct and effective ways of helping people, particularly for this holiday weekend, though it doesn't sound like it's going to happen just quite in time for July 4th.
You know, I had Jason Furman on, the former Obama Council of Economics chair, as you both know. And Mitch, one of the things he said is that the underlying economy itself, this has been argued here a good deal, it's not perfect, but it's relatively strong, which could explain some of this persistent spending we're seeing from consumers, either planned for this July 4th weekend, whether you're traveling by ground or air, and that is going to hold us above water. I think I'm getting the gist of what he said. What do you think of that?
Yeah, that is true on the surface, Neil, but I just don't know how long that's going to continue. Because if you look at what's happened, Americans had saved a tremendous amount of money during the lockdown period, during a period where all the stimulus was floating around. But they're starting to burn through those savings. And we're starting to see credit card balances back on the rise. I think what's happening psychologically, there's still all this pent-up demand where people felt like they were held back from indulging in whatever it is, and they want to continue to do so. But when credit card bills start coming in and when savings accounts start to dwindle, and let's remember, your savings account, even if you don't buy it down, becomes less valuable every day because of inflation. So I think if you look at consumer sentiment last week, consumer confidence that came out today, I think they're signaling that the consumer is starting to get a little frustrated, at least when they're responding to surveys.
Yeah, maybe that's what's got us near session lows today. We're down about 313 points, Aaron, and it's this tug of war between those who think the Fed is doing a good job trying to get ahead of inflation and those who say it's doing such a good job it's going to lead to a recession. So the choices are not great. Where do you see this going?
Certainly, the likelihood of recession is definitely higher, and people need to be prepared for that. I think, to the point that the consumer confidence number coming down, I think that is a good indicator generally of how people will change their spending habits a little more going forward. So they may already have their plans for this weekend and for immediate summer holidays. As we go farther into the fall, back to school, that type of negative sentiment, and it was a really low sentiment indicator, would be an indicator that people are going to cut back on spending. And on the positive side, China reopening has certainly helped with some of the fears around some of the supply chain inflation on that side, on the commodity side. So it's a balancing act of whether consumers are going to curtail, whether the rest of the world, how that's going to act, and of course, energy being another big question out there.
All right, guys, I want